Good afternoon, everyone. Welcome to the live webinar with Admiral Markets. Good to see you here. It's Tuesday. We're going to take a look at the live charts, technical analysis from Forex, commodities, stock indices. But first of all, two disclaimers. The first one explains that the webinars are shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if these webinars are suitable for you. The second thing, also please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, this Admiral Markets webinar is going to start very soon, but I just wanted to first of all introduce you to Admiral Markets. AdmiralMarkets.com, that's where you can find Admiral Markets, of course, and you will find a lot of info there. About us is the section that just explains basically the regulatory elements. You can find more information about testimonials. You can also start trading about accounts and stuff like that, deposits, withdrawals, account types, products. It explains the financial instruments, of course, and then platforms, how you can trade it. How can you tackle those products with what kind of software? So there are a couple of options here. MT4 Supreme Edition is a special custom designed plugin with 68 plus extra features that is designed by Admiral Markets on top of the usual MT4. And then last but not least, what Nenad and I try to help out with is analytics and education, and you can find out more information there. So definitely recommend taking a look after this webinar. If you have any questions, feel free to use the chat, of course, and reach out to us, or to me in this case. Sometimes Ned is with us, but today only me. And reach out to the chat, because sometimes I might be going quick, sometimes I might be using some more advanced methods, and it would be good to double check that. Let's see. Andy and Dushan, good to see you here. Hope that your trading is going well. I talked about yesterday about your upside, your dollar upside. I was looking at your yen, your New Zealand, your dollar myself. Hopefully you managed to grab some of those pips to the upside. And I hope that everyone had a good trading week and good weekend as well so far. Let's show the charts at this moment. There we go. All right, so your dollar hitting the minus 61.8 target of this fib, as you can see, extending its gains all the way above 120. So I talked about price going up to 120 last week, of course, when price was making this correction right here, and that looked like a bull flag at first. Then we got a break, a pullback, and then it started to look like a triangle. And then the triangle and bull flag finally broke, and that was a good trade from 118 up to 120, and even further than that. So good bullish momentum, good bullish break, and I think that this was a good uptrend, and it's still uptrend, of course. Now price, however, reaching R2, reaching the minus 61.8 target, still basically at 120. It could be a kind of correction spot as well. So we have to dive into lower time frames, I think, to see how far this could still push to the upside. 120 is a target, but price is above it already, 50 pips. So it might extend further to test the next resistance spot, maybe 120, 130, the next target, maybe the R3 at 122. So let's take a look. So from a wave perspective, from a wave pattern point of view, and from a market structure point of view, to me, this is looking like a wave 3. And I think that price could be completing a potential wave 1, 2, 3, 4, 5. So I think there could be one more push up, and after this correction, there could be a continuation. This could be a wave 3, and if you look internally in that wave 3, all right, this could be a wave 1, 2, 3, 4, and this just completed a 5. Within 5, there was again a 5. 1, 2, 3, 4, 5. And if anyone looked at the wave analysis of myself this morning, could have seen 1, 2, 3, 4, and I had a 5, or a green and a red 5 ready, right? Or I use different colors, but you get my point. So that's what happened this week. This week we had red wave 4 finish, we had green wave 4 finish, and we had this push up from 119.25-ish, right? So about 130 pip push so far. So that was a good move up. And last week, Friday, we had the break from 119 to about 119.50. That all is part of a wave 3, in my opinion, of different degrees. But looking at this entire structure, this is one momentum, one push up. And I think when price corrects this one push up, that there could be one more higher high, because there's no divergence. Look at the 1 hour chart. You might be thinking there's divergence between these stops, and you would be right, but it's not of this 1 hour chart. This 1 hour chart is just one push up. This is one swing. This is one structure, which means that once we get a correction, this should dip down to the 0 line. We already see it fading like this after having some weakness with this top. So this is probably, as I already indicated, a wave 5 of wave 3. And the wave count really doesn't matter that much, by the way. This is just for your information, for those that like waves, right? I'm just adding it. But the most important factor is that this is one swing. All right, and within that swing, typically you have a strong push and a weak push, and then you go back to the 0 line. All right, so this looks like wave 1. This looks like wave 2 when we use the oscillator. This looks like a wave 3. When this goes back to the 0 line, it's a wave 4. We would expect price to go back to the 0 line, move up, but not break this top to show divergence, and then move up. So let's put a fib, if you all agree with that. Let's put a fib, all right, from the wave 2 bottom to the wave 3 top. And for wave 4, fibs, typical fibs, are shallow, 23.6, 38, 50 fib. So price could go back in a 3-wave move down to the 38, 119.50, 119.20, but even 120 could be a bouncing spot. There are a couple of ways how price could correct. It could be most often in a wave 4, it is a bull flag or a triangle. So what I would be expecting is price to make something like that. Hit 120, bounce, and start making a triangle like this, where the highs and the lows don't break. So this could be A, this would be B, this would be C, this would be D, and we have an E. And then price continues higher like that. All right, after the wave E is finished. That's one way. The other way could be that price makes a bull flag. In that case, it will probably retrace down to the 38.2 fib. So with that in mind, what could be trades? Let's take a look at the target. Minus 272 target is at 121.50. So one potential trade could be an entry at 120. But the stop loss, I think, would have to go below 119.20, maybe 119.15. So that is about, if an entry is done at 120.05, it is about 90 pips risk. All right. The reward, however, would be 121.50, the target, or maybe if we feel a little bit more aggressive, even 122.40. The smaller target, however, is about 145 pips. So 145 divided by 90 is about 1.5 to 1 reward to risk ratio. That's okay. Right? So that's one way of trading it, in my view. Another way could be, for me, what I might be thinking of is just waiting for the pattern to finish. The risk is that the pattern, that it extends somehow. Like it hits 120 and it starts to fly up, and the expected pattern doesn't happen. That might happen. So that's one risk of not taking a trade at 120. But okay, there are always pros and cons. So if I wait instead and wait for a bull flag, I might, in that case, see that price is going to go to the 38. And if I enter at the 38.2 fib, my risk is a lot smaller and my reward is a lot bigger. So that's pleasant. My reward becomes almost 200 pips. My risk goes down to about 40 pips. So all of a sudden, I don't have a 1.5 to 1, but I have a 4 to 1 or 5 to 1 even, if that's possible, if I do my math correctly. It seems like a lot, but if I did my math correctly, it is something like that. The other way, of course, is waiting for the pattern to finish and then trading the break of the pattern. Letting the pattern break, whatever it is, a triangle or a bull flag, let it break, pull back and continue, take the break, the pullback, or the continue. So those are all kind of ideas that I think fit properly within the structure of this breakout to the upside. I'm not saying that your dollar will go up forever, but with this kind of momentum on the 1 hour chart and 4 hour chart, I think one more higher high is possible. But considering the fact that I believe, from a wave perspective, a wave 4 is likely, that might take some time before this happens. It might not happen today, probably not will happen tomorrow. It could be Thursday, maybe Friday, maybe next week. Could take some time. So I think that's about it. Any questions on the euro dollar? And you can see on the 4 hour chart, definitely strong momentum as well. 1 hour chart, 2, 4, 6th candle, not breaking this high. On a 1 hour chart, we see the first sign that this is going into a correction. Also considering this price movement down, it looks like this upside will face a bounce as well. So I think this kind of three wave motion of down, up, down for a bull flag or triangle is probably going to happen. All right. Although you never know with trends, they can sometimes surprise you. They can sometimes push further than you expect. But yeah, that can happen. All right, no questions. So let's move on. This is my view on the euro dollar. And we will see, if there's a continuation possible or not. The euro dollar breakout on Friday, I did not trade. It was quite late, and I wasn't behind the charts anymore. And this is one I missed, unfortunately. Although I was waiting for it, but it did catch me a bit by surprise, to be honest, regarding the timing, because it was Friday relatively quite late. Around this time, yeah, I wasn't buying the charts anymore. I think I wasn't monitoring it that much. I still had the charts open, but I wasn't I wasn't actively keeping an eye on it. I just had it in the background in a way. I forgot we were about to do something that evening. I think I forgot already what it was, but yeah, there was a bit annoying timing point of view, unfortunately. But those who are keep the eye on the ball, hopefully manage to get some pips perhaps, right? But the timing was not that great. Pull back on Monday, yeah. On Monday, I was hoping for some pullback to 119, but I realized that you never know. It was 50-50. It could just make some sideways move and then keep pushing. It would have been good to catch the 119 indeed. But it didn't, unfortunately, didn't go that deep. But I think there's still plenty of opportunity on the euro dollar because I think that this could be wave 4 or 5. So that could be good. And once it finishes at 5, I still think there could be a bigger wave 3 finished, and there could be a bigger wave 4 or 5 still remaining. So I think this euro dollar, from that point of view, is the uptrend is not going to go away necessarily. There might be some bigger corrections sooner or later. Let's take a look at the bigger structure very quickly. So looking at this weekly chart, we see we're in a bullish momentum, and ever since this break, and ever since this break, and ever since the break of 113, price has been confirming the upside. So where could it stop? No one really knows, but logical levels are quarter levels, round levels, targets, fib targets. Now it's above 120. I think that the next push could be to 122.50. Eventually, there's going to be some correction on this euro dollar, and I think after that there will be one more push up, and that could complete 5 waves. Then there could be maybe an ABC correction down like this, and then up again. So overall, since 113 break, I've become more bearish on the dollar, specifically this pair, but also other pairs. We'll take a look at that now. Dollar yen is one of the few that is moving down. It's showing also dollar weakness. Sorry, I got confused. No, it is not different. It's showing dollar weakness as well, in fact. But it's not as spontaneous maybe as the euro dollar. It did break this channel, but this blue zone is still alive. It's still kicking. It's still providing support potentially. One thing could be good is to look at today's candle. If today's candle, daily candle, of course, has a big wick at the bottom, like it does here, the bears are having some problems to hold control to the downside. So, yes, I was a bit mixed on the dollar yen. I did think that this whole blue zone could be a bouncing spot to this red resistance zone, but luckily I did say look for the break of R1 and the channel and hook back and continue, which didn't happen. So that was avoided. I also said if it breaks the blue zone, there is a small space down in here. So let's see if it manages to break this blue zone, and it's having some struggle, I have a feeling. But at the end of the day, I think we'll know a bit more. I know it's a bit difficult to see these candles, maybe with this blue zone, but you can see quite indecisive move. Yes, we had this fall, but after that, it's been going sideways. And all in all, I'm not really that interested in trading it either way. So I think we can skip this one. I just wanted to say that today's candle, can wrap it up pretty quickly. Today's candle, I think, is pretty important for having some more information. All right, pound dollar, I think, is an interesting move. It made it up to 130. I discussed 130 in the video yesterday. I was talking about this fib in, I think it was in the video yesterday, if I remember correctly. Sometimes I'm sorry for the confusion sometimes, but I remember, I sometimes forget what I said to whom about my analysis. Typically it's about the same, but sometimes I forget something there or I add something there. That happens naturally. So, but if I remember correctly, and my memory is sometimes not so good, but I was talking about these fibs, the 50 fib primarily, being the deep, better bouncing spot. It didn't get there. It hit the 38. Basically, just missed about a little bit, but I would consider it a 38 pounds. Made a strong wave 5. And I think it's finishing a 5 wave. So it's the same like the euro dollar. I would put the bigger fib on the chart on this 5 wave pattern structure. This is one swing high, swing low, probably. And what could be happening is now it's going to make an ABC correction. This ABC correction, I think, could go quite deep, because if this is a wave A and this is a wave B, it could go down to the 61.8, 50 fib. Those will be typical spots. So what I am expecting is price to hit the 38 or the 23.6 fib, make a pullback and another fall like this, and then bounce up again. So interesting trades, I think, are looking for longs at 128.50. I think that's the most interesting one. After a 3-wave pattern has completed, and the target, I think, could be 130.30, maybe 131. At that particular spot, the pound dollar might be finishing an ABC correction. There could be this swing high, swing low right here. This swing is bearish. If this is a 3-wave up, then this swing could be a bullish but corrective pattern. And that means that 131, 130, 50, 131 could be a bouncing reversal zone for more downside, if this happens. If, however, price makes a downside and starts to aggressively move up and starts to break these targets, then and moves up above 131, then an uptrend could be still valid. So it's important. I would not be looking for pending orders at 131. For instance, I'll be looking for confirmation signals, which would be weak candlestick patterns at the target, divergence between these tops, a rising wedge formation in wave C, for instance, candlestick patterns there, breaks of the support trend lines that could be indicating a continuation downwards. All these kind of things we regularly discuss in this webinar. So I need a confirmation that this is an ABC, because the alternative could be that this is a 1, 2, 3 and an uptrend. So, but the good thing about that is that the buy at one of these fibs here looks good, because there's, in both cases, there's confluence for a potential up move to this. And whether price breaks above that to continue uptrend or turns down for a bigger downtrend, that remains to be seen. Both have good potential. Price should not break below this low. If this is an ABC zigzag or a 1, 2, 3, price should not break below 127.73. That's invalidation. If it does break below that, the structure, this market structure, is different than I expect, and my analysis is invalidated, and the trade is invalidated. So far, there are good signs of this. This is looking like a 5 wave, so looking for a pullback continue. But just warning you that this zone could be a headache, and that could be a turning spot. And it all depends if this is an uptrend or downtrend. Nobody really knows. For the moment, price is an uptrend still. All right, and that will only change if price breaks below this bottom, this blue line. And the uptrend is really only valid when price breaks above this red line. So until price breaks those levels, we don't really know for sure. But we don't have to wait for that necessarily. I think that there are bouncing trades here and potential bouncing trades here upon confirmation. The red circle has to do with a head and shoulders potential like this, which could be a reversal chart pattern for downside. So that's why 131, 130.50 is another reason why there's a resistance, spot there too. Okay, so but I don't want to, reversal patterns sometimes like these head and shoulders don't really play out necessarily always. So the neckline, if something like that happens, is really this. So even if price stops here, the real confirmation of the head and shoulders is upon the break of the orange and the blue line. So blue circle is an up trade, red circle is a potential down trade, and then of course the break is a down trade. And this is a potential up trade, and here a potential down trade, and here a potential up trade. So those are, my zones of interest. Where to short? I would not short now because price is at the 23.6 fib. But if price makes some small upside here, right, I would like to see, because price is kind of chopping down. This is not very impulsive price action. So it could stop at the 23.6 fib. And what could happen is that price makes a small bounce like this. And then it faces weakness and it moves down to the 38.2 fib. So if you're looking for reversal trades against this momentum, which is always a bit risky, but there are reasons for that because 130 is a round level. And if we put a fib from here to here, price is at the 38.2 fib. As you can see. So from that point of view, I think it makes sense to look for a bounce, but not here because there's a good chance price might make a small retracement like this and find weakness here and then move down. So it makes more sense around, I think, maybe 129.70, probably 129.65. In my view. Now, you never know, it could break and fall, but I think that's a bit too risky, personally, to trade it right here. It's possible, no one can predict it with that much accuracy, and it could fall like this. I'm just looking at it from, is it desirable to trade? And I think that there's too much likelihood of a bounce before moving down, so I would not personally. This is the sixth candle, so we should have plenty of time. The Asian session, the end of New York session, I think is just going to be correction on the pound. And tomorrow, London, I wouldn't be surprised once it builds a correction like this and it builds a triangle, that it breaks to the downside. But if it does break to the upside, keep an eye on those both trend lines, really, basically, because if it does break to the upside, there could be one more push up to 130, 130.25. But this upside, be aware that upside could be quite limited. In my view, it could be a small trade to the upside. All right, so that was the majors. It took a long time today somehow. I don't know why, 30 minutes. Hope it wasn't too too detailed, but I am going to take a look now at some questions of yours. I see some comments. That's great. I also promised indeed for Angel to look at his question regarding NFP, if I remember correctly. Thank you, Dushan, thank you, Angel, for reminding me. Let me open that email again just to double check. So I answered ZT's question about shorting, my opinion on that. And let's see. Dushan, I answered. Dushan said, I have a plan something similar as you did. Great. Sayed is asking, can you also look at pound yen, pound New Zealand? We can do that. And the other yen pairs, CAD yen, pound yen. Yep, makes sense. All right, so let's take a look at those other pairs. First, though, I want to answer Angel's question before I forget about that, just in case, because once I dive into analysis, time flies and you know how it goes. So, and then before you know it, we're out of time. So, Angel's asking about possible to discuss how the NFP and unemployment rate on Friday will affect gold. Is it possible to tell me your opinion for different scenarios? All right, so one quick note, first of all, is that I'm not really, reading a ton of fundamentals. I do, of course, keep up to date a bit and read some stuff, but I'm not like heavy into, charts of fundamentals and stuff like that. I like technicals, but generally speaking, though, my own analysis, I haven't pre-read anything necessarily about the upcoming NFP, but you can do that too, of course, on your outlets of news. But yeah, the NFP, I think that at this moment, probably market is a bit struggling with the dollar, I would say. I think that the Fed is a bit in a difficult spot. You have a huge balance sheet, of course, of trillions, and the government has a big debt. So an interest rate hike would put pressure on households, companies that have that debt, but also the government. The inflation is and the economic performance is going up, but it's not really, it's been a good run, but it's not, inflation is not really that visible yet. It's a little bit, not that much. So I think that ultimately they're probably, as I think we indicated this year, that we're not going to expect that many interest rate hikes, to be honest with you. And I think that that particular opinion has been so far confirmed. Now, you never know. They can always still go a quarter ahead eventually if they see a good NFP number. But ultimately, it's difficult to say exactly what will happen on Friday with NFP. It really depends on those interpretations of those numbers. But regarding to gold, let's take a look at gold. And on Monday, I wrote a piece saying that watch out for the break because this Friday candle was bullish and it looked like it was ready to break, and it did. And what has one more zone left at 1350, 1370. If it breaks that, then I think that this is a strong uptrend. Angel caught that break. That's great. Perfect. And definitely this 4-hour candle and daily candle were good confirmations that this was a consolidation zone for upside. Also, time factor pattern, right? 1, 2, 3, 4, 5, fifth candle, still within this momentum, in fact. So that was a strong bearish candle, but after a couple of days, I already said this is looking not so good for bears. And Friday we had that candle, and Monday we got the break indeed. So I think that this is looking like strong buying to me at this moment. This year has been up, has been bullish, and I was looking maybe for a bit deeper correction here, but with this break, I'm expecting bullish continuation. Even here, I doubt that it might stall a bit there, but I have some doubts whether it's going to be a big pullback. I think that this is going with with this break and definitely the next break. I think gold is clearly steering itself into bullish breakout territory. I was bullish already on gold, don't get me wrong. It's just that I was bullish here and I was expecting correction here and maybe here, but all of them I thought were dips for potential moves up. Now, with regard to the NFP, I think that Fridays and Mondays are typically volatile days for gold, and I think if we have a good dollar day, we might see gold make some retracement back down, but ultimately I don't think it's going to be that dramatic. So we might see some internal move down if it does make this bearish move, but if it's a bad day, this could start flying even more so to the upside, and it could be a reason for price to challenge the resistance. So ultimately, I think looking at the daily candle of gold on Friday will probably give us the most value, like we did last week. Just looking at the daily candle itself. Alrighty, gold I think is just becoming very attractive as a hedge. I think it's becoming attractive to diversify the portfolio. I think that you can see, uh, more and more interest as well already, as far as I've read, from big countries like China and Russia in gold, buying gold. So it looks like big players are stepping in now at the moment, as far as I've read, heard, see on the charts. So this could be pushing gold further. When our chart looks like this, looks like a wave 4, internal wave 4. So if anything, more upside is probably expected. 1312, any of these fibs, I think, should be bouncing spots for upside. All right, let's take a look at some of these yen crosses and kiwi. All right, so what's going on here? We have a bullish swing, we have a bearish swing, and could this be a new bullish swing? Is this the end of this downside? And probably yes, we have divergence. So the target has already been hit, which is the long-term moving average, but it doesn't mean that that's it. There could be a bigger correction on the kiwi to the upside as well. We'll know that if price is breaking through a resistance spot. I would say what broke above that already, so we'd have to use maybe this trend line like that, right? Or this zone like this. And price could get up to the R1, make a small dash still up to the R1 maybe, and these trend lines make a correction and then move up again. So ultimately, yes, I mean this formation is a bit up down, and what is the trend, right? This is not easy to see. We could look at the higher time frames, and we'll see that price is more an upside momentum here, not momentum, but at least some upside pattern at this point. And if we put a fib from here to here, you can see that price is at the 50 fib as well, bounce at the 50 fib, bounce at the long-term moving average. So, I think those are good signs. I think that therefore price has a good chance of moving up, but it's at a resistance zone right now. All right, so I think that from this perspective, probably better for price to move up, make a three wave down, and look for a buy somewhere here for upside. So I am more inclined to upside at this moment, unless price really breaks below the support trend line. All right, that would make me a bit doubtful about the upside and probably the support level. But ultimately, looking for a bounce here or a break. I think that why? Because basically, I think that this swing could be finished, and we might be starting a new swing on the Kiwi, with the target being the R2 and the R3 of the weekly pivot point, or we can put a fib from this top to this bottom. Right. So now you can see the price is above it, so it might hit the 38.2 fib, make a three-wave correction, and then go up to the 50 or 61.8 fib. Right. Let's take a look at some other yen pairs. All right. Euro yen. I took a trade this week on a euro yen. Let's see, it was here. All right, so I managed to grab a small little trade here. About 55, I think, or 60, making basically a strong drop, then rallying again. So let's take a look at the 4-hour chart. What is happening? Basically, it's still within a breakout to the upside, but we have to be aware that price is struggling to break this top at this moment. And we can take a look at how many. Let's take a look at how many candles have not broken. 4. This is the 5th candle. So yes, this was a corrective pattern. Yes, we had a break, but will it break this top? It really remains to be seen. There is no guarantee for that. There is divergence between these tops. And if it fails to break, it could also be a sign of weakness on the euro yen. A lot has to do, of course, with the yen side as well. Will it break through the bottom? Here at this spot, I don't like it either way, the euro yen, really. I know that there are traders out there that are probably looking for some confirmation of downside, for instance, because of the fact they're expecting weakness. Let me get rid of the mini terminal for a second. Because of the fact they're expecting head and shoulders. And that could be certainly something to reckon with. Now, I myself was looking for longs here just because of the break. There's so much momentum in this break that I really didn't care about, let's say, the daily potential head and shoulders pattern, because I know that on a lower time frame, it could easily still push 50, 100 pips, and I could catch that trade, and it could still, turn out to be bearish structure on the higher time frame, but it doesn't really matter on the lower time frame, right? Because of that momentum. The momentum was so big that I like the trade continuation here. But now at this moment, it's quite choppy, and it just doesn't look as good anymore for upside. Downside is possible. But I think that I would be looking, if I would be a reversal trader, or if I would be looking for a reversal trade, I should say, then I would be looking at this daily candle, to be honest. And big wick at the bottom at the moment. So I think just we need more information at this point. But if there is a big bearish close at the end of the day, well, yeah, then this could be a signal of a pending yen weakness. Yen strength, sorry. All right, opposite. Even I get that mixed up sometimes. All right, so pound yen. Let me move to our usual template. All right. Now, pound yen is looking weaker than the euro yen. And that has everything to do, of course, with the fact that here we had failure to break above resistance and we moved down, and price is in a range at this moment. It kind of looks a bit yucky, but ultimately on a weekly chart, it is looking like what could be an ascending wedge, but that structure is losing a bit of validity with this strong down move, but it still could be possible. This could still be a higher low. So technically speaking, with the doji, it could be a bouncing spot, bounce or break spot in a way. All right, so let's take a look at the daily chart now. Four-hour chart. All right. So 4-hour chart looks like to me that there's divergence, and the moving average is the target for that. And if we look at the hourly chart, there's a good chance that there are 5 waves here too. So there could be an ABC correction and a move up, just like with the pound dollar. So this looks like a lot of choppiness right here. But ultimately, I think there could be maybe a small dash down and then move up. What is tradable? I have a bit of hesitation, but ultimately, one reversal trade could be to put a fib from here to here, and it could be a triangle. If a triangle, one could be the 78.6 fib. The other one could be, if this is a triangle, A, B, C, as long as it doesn't break this bottom, and then a D, and then an E. So somewhere in here, after the E is finished, could be also one way, or a break of this resistance line somewhere here. So that could be one, potential trade for upside. Downside, probably would we have to look for a move up to resistance at the very least, or a break of this bottom really, for an extension lower. So I'm not saying that pound yen is necessarily bullish. Don't get me wrong. I do think that yen could strengthen. I do think that the dollar yen is possible to break through that support zone on the dollar yen of 108.50, and the yens might start flying down. This pound yen, euro yen, dollar yen. It's just that I think it's still a bit early. I think I'm a bit hesitant with calling it down right now. I think that the structure on the euro yen is definitely in the no man's zone at this moment with a bullish trend right of resistance. But the pound yen, in fact, although it has moved down a lot on the 4-hour chart, right? Don't get me wrong, but I think that this kind of pattern could lean itself to one more push up. That's what I mean. And it could be better to wait for this zone if you're bearish. Let's see. All right, you're odd. Maybe one more push up indeed. What else do we have on our radar? Let's see. Pound New Zealand. Well, my triangle got invalidated. My potential triangle was here. A, B, C. No, something's wrong. A, B, C, D, E. I think it got invalidated. Yeah, it did. It pushed above this resistance spot. So it's not a triangle anymore. And I was talking about a potential wave 1, 2, 3, 4. So it's not a wave. Well, it's not a triangle at least, that's for sure. But it didn't really invalidate it with a lot of strength. It depends on how today's candle will look like, I think. If today's candle is something like this, looks like a false break, it still could be a correction. And if anything, a small pullback could be ready for more downside to test the bottom of this support line and this pattern, basically. All right? And if it breaks that pattern, if it breaks the support, it's ready for a breakout. If it moves down and bounces, then it can go back to retest this top, and eventually we're just waiting for a breakout, basically. Which side this will break out? I used to favor the downside, but now with this invalidation, I think I'm just back to 50-50, really. I don't see any particular advantage to either side. I could look at all these time frames, but basically you kind of see different structures. You see a start of a correction here. Could this be an expansion of a correction? But you also see downtrend here. So ultimately, quite a mixed bag on this pound New Zealand. And therefore, I think it could break to both sides. But probably the best is just to keep an eye on price action and these trend lines and see where we have bounces and breaks. Euro New Zealand, basically pretty much the same as the euro dollar, euro yen, moving up nicely. And anything else? CAD yen and pound yen. Pound yen, we talked about. CAD yen, we didn't. I like CAD yen probably the most. If I had to choose a yen strength, pair. Oh, sorry. All right. CAD yen, let's take a look at that. All right, we see basically price bouncing off the Keltner a couple of times here, here, and here. So basically in a range and going sideways on this monthly chart. Price is about halfway that sideways zone. All right, but I think that an ABC correction looks pretty decent probability. We also have pretty bearish price action here. And if you put a fib from here to here, no, it missed the 50 fib, but okay, that would have been nice. Ultimately, though, this upside is looking corrective. It looks like a ABC correction. There's divergence between these tops, as you can see. So then the momentum is back into play here. So with momentum, divergence on the daily chart, and this also being quite corrective and choppy, well, things are starting to add up for an interesting kind of structure for more downside. And I think that this could be the neatest yen pair, perhaps. So I think it was a good choice from Andy to talk about this one. I think that there's no guarantee that this particular correction has to be finished right now. And it could also bounce, go up to the R1 and 61.8 fib. I think that this is the problem that most yen pairs still have because it's still like debatable. Is it still like in this correction? So we can set up lines kind of as an invalidation confirmation. So one line was this. Well, price broke through that. But how? Well, it broke with a big wick. So is that a good break? No, this is not a good break. That's just how it goes. So that doesn't say much, which means that I would adjust the trend line a bit to have something that gives us more value. Maybe something like this. So there's a couple of ideas. One could be to wait for break, pullback, continue, like some bear flag in here. The other could be to wait for a candlestick pattern at the R1 on the 4-hour, 1-hour chart. Wait for price to get up there, probably slowly, and wait for a turn here. So that could be two ways of trading this turn, I think. Let me count the candles. 11. Looks like this correction could be finished soon, maybe even this week, end of this week, maybe next week. Counting the candles. This looked like momentum. This looks like correction. So this could be downside. I think that looks pretty likely. Back to the 4-hour chart. And maybe a quick look at the hourly chart. One other possibility is that it doesn't go up to the R1 and that it kind of moves up but stalls in here at resistance, right? It makes a correction like this and then it can't break resistance and then falls. So it could be also worth looking for a turn here. Alrighty, folks. Well, I think we looked at a lot of pairs. We can maybe take a look. Bitcoin already breaking now as we speak, actually. Just happened about 1 hour ago, actually. And showing a good breakout of 44.44 and up already. I think 5,000 could be the target for that for the moment. What else is going on in the world? Well, we have Dow Jones index with 2 bearish candles, one bullish. This has, if this is going to correct downwards, as I said, it will take at least a couple of weeks of not breaking a high. As long as it keeps pushing higher highs, I'm not even thinking of any potential correction as yet, but eventually it might happen. Just have to wait for the timing. Silver looks like it could be breaking out soon, or is already to the upside. That could continue just with gold as well. S&P 500 looks pretty similar. I'm looking for oil, but I cannot find it. There we go. Aussie, yeah, we can take a look at the Aussie. Sorry, I forgot about that. And Euro pound. And then that would be time probably to wrap it up. So far, this is still looking like a correction to me on oil. Still the same pattern, really. On a monthly chart, price has been in this pattern for 18, 1.5 years. So I think from this perspective, this wave 4 could be ready to maybe be completed. This looks like a wave down. Wave 3, this could be wave 4. It looks like we're getting a wave 5 that could break or challenge this bottom. So I think from this perspective, price might be sooner than later ready. Eventually, if it breaks below 42, I think we could see a downside pressure continue on oil. And definitely looking like it's setting itself up for a turn here, in my view. And looks like a 3-wave correction here. This is a bit choppy, but yeah, it's probably, I don't see any trades at this moment. But all in all, I'm also running a bit out of time. But all in all, I think that the formation is looking bearish. It's just that I'm not sure if this is the best moment. Maybe if it makes some bear flag or something like that, it would make more sense. Aussie and Euro pound, let's take a look at that. All right. So about 79.25 as I expected, made one move up. Was a bit choppy though, made a strong downside, probably news related. let's see. Let's take a look at 4-hour chart now. It is trying to break. It looks like it finished in ABC's correction, upside. So this looks like one move. This looks like one move, and now it's making this move. So within this move, how far is price? And it's looking pretty good, I would say, at this moment for continuation, especially if it's a daily candle like this. Might just wait for the daily candle to close like that and wait for a bit of a pullback maybe into 79.50 and look for continuation. All right, it's close to 80. Now it might break 80. I don't know. It doesn't have to make the correction to 79.50. If it breaks 80, if it just keeps pushing like this, I would probably just wait for 1 hour momentum to arrive. And if it really starts to push up like this, that's great. Nothing wrong with that. Just put a fib on it. Wait for 38, 23.650 fib bounce and look for continuation. From my point of view, that's pretty simple. If it does move up without a pullback, I would just be looking for more momentum to confirm this pullback. And last but not least, and then I have to push off because I had to move the webinar 1 hour earlier, as you noticed, luckily, because all of you are here. Luckily, so that's great. Or at least not all, or maybe some missed it, but many of you at least. So Euro Pound definitely in a strong upside, broke a lot of resistance spots. Not a big fan of trading it, this Euro Pound. I just don't like the pair, but ultimately, this is a bullish formation and bullish trend. I don't see anything necessarily seriously endangering this, except maybe the monthly top, up at, 90, 98. So yeah, got plenty of space. 95 is a round level, of course. So ultimately, I think Euro Pound might make some corrections. That would be great if it did, if it made some kind of bull flag or triangle, or maybe even a correction like this. Ultimately, if it does that, if it does a triangle or a bull flag, look for the break. If it makes a zigzag, put a fib on this, look for the -272 target. But I don't think it will really retrace much deeper than the pivot point because of these support zones and this support zone. So I think that the first level of bounce could be around 92.60, 92.50 with these tops, these bottoms. And the second level of bounce could be around the weekly pivot point. Those are both support zones. And those could be interesting spots for uptrend continuation for one more push up. So that wraps it up, I guess. Check out admiralmarkets.com for more info about MetaTrader 4 Supreme Edition, indeed, with the Keltner bands, among others. It was one out of the 60 extra features that is available. More webinars with education, Forex and CFD webinars, analytics, of course, all of that is there. So check out admiralmarkets.com. And above all, wish you great trading and hope to see you soon. Cheers.